Hooty-hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It is Wednesday, December 30th. What do we got going on today in the stock market? Well, we got the rally continuing. The stock market is going higher, and this is the Santa Claus rally into the end of the year. The printing of money is going to continue. We signed a $2.3 trillion bill yesterday. It's a debt package. Now, people only talk about the $900 billion of the stimulus package, but it's really a $2.3 trillion debt package pushing the markets higher. All right, what I want to talk today about is real estate. Real estate, I'm getting a lot of pushback. A lot of pushback saying, hey, prices can't go down. They never go down. This is real estate. Prices do go down. The residential real estate market is going to come down. Now, a lot of people don't think that's true. They think the Fed's going to keep buying the mortgages. They think that low interest rates is going to keep the demand up. They think corporations will pick up any foreclosures. I disagree with most of this. Now, granted, what we have, the reason prices are at record highs, $320,000 plus for the average home in the United States. Now, what we have, though, is we had new home sales come out. Now, they were expecting them to be pretty flat. But what happened? An 11% decline in new home sales. Why? Why? Because no one can afford to buy them. They're running out of qualified buyers. Let's talk about this. What's the average income in the United States? Do you realize it's right around, let's call it $35,000 a year? That's the average income. What's the average home cost? We just mentioned it. It's about $320,000 a year. $35,000, $320,000. These numbers don't work. Something's got to give. Either income's got to get up a lot higher, or it's going to come down. It's going to come down. I believe the housing market is going to come down. Now, a lot of people say, no, Mike, no. It'll never happen. It'll never happen. They're just going to lower interest rates and push it higher. Look, we were in a bubble in 2008, 2009, and it did come down, right? It did come down. Well, what happened? Why did it go back up? Why did the bubble reinflate? We were in a bubble then. We're in a bubble now because we're actually at higher prices than we were back in 2009 when it did kind of crash. What'd they do? Well, they lowered interest rates. Interest rates were about 5% back then. You know what interest rates are now? You can get a 30-year fixed for about 2.3%. You can get a 15-year fixed for under 2%. So they went from about 5% interest rate down to 2%. Now, can they drop another 3% from here? I suppose they could, but we would be negative then. We'd be a negative 1%, and they would be paying people to buy houses. Now, is that going to happen? I don't think it's going to happen. I think we're going to get another crash. I think we're going to get the pullback. Now, what do we see increasing? We see tent cities increasing. We see homelessness increasing. The reason nobody can afford housing, they can't afford rent. We got 30 million people not paying rent. What, landlords don't want to be landlords because they're not getting their money anymore. So these are going to be homes that are going to be starting to come onto the market. People are in forbearance. We have about 3 million people in forbearance. Now, forbearance is just a polite way of saying, hey, I can't pay my mortgage anymore. Let me go into forbearance. Okay, you're in forbearance. Now, they can kick the can down the road, but eventually is going to be this tsunami of foreclosures coming onto the marketplace. Now, here in California, we got a solution for the foreclosures. You know what, Gavin Newsom, he's our lovely governor. What he wants to do, he wants California, the state, to buy up all the foreclosures that are coming. He thinks it's going to be a great way to make money. The state buys the foreclosures, they rent them back to the people. They become the landlord. The state becomes the landlord. Is this a good solution? Well, I don't think so. I don't think the state has money to buy houses. As a matter of fact, I know they don't. Our state is broke, but Newsom says we want to buy all the foreclosed homes coming on. Well, we'll see what happens there. Now, a lot of people tell me, Mike, you got companies like BlackRock just sitting back. They want your house. They're going to come and buy it. They're going to come and get your house. Maybe. A few. I don't know. Maybe. We'll see. And you got all these iBuying companies. Everybody wants to buy. Look at Zillow. They got iBuyers. people want to buy your home. Right now the market's hot. The market's hot. People want to buy homes. And I'm a real estate broker, in full disclosure. I agree the market's hot. The market's way hot, right? Okay, we probably increased 10% just in the last quarter in my area. I mean, really, things are still strong. Prices are strong. There's not that much for sale. Now, why is there not that much for sale? Well, there's no foreclosures, right? People took their house off the market because of the COVID. They don't want people coming in their house, looking at it to buy their house. No, house inventory is at a record low. Interest rates are at a record low. Prices are at a record high. How much more do you think this will continue? Well, it's 2021 just around the corner, right? And I think this is going to play out a lot in 2021. I'm willing to bet that home prices from right now will be 20% lower a year from now. Now 20%, Mike, that's not that much, you know. Heck, a lot of offers go 20% above listing price right now. So they just come back to listing. Maybe, but 20% is a drop. This takes time to play out. It's going to take 2 or 3 years to play out. And if you drop 20% a year, you're going to be down 60% from where we're at right now. People go, oh my God, you can't even say that, Mike. That just upsets people when you say they're going to lose 60% on their houses. And it's really kind of sad. Now, the average house in the United States, it has $194,000 in equity. So let's say the house, let's just use round numbers. Let's say the house, $600,000 house, they have $200,000 in equity, they have a $400,000 mortgage. Now what happens when that $600,000 house loses 30% and comes down to $400,000? Well, what gets wiped out? All of the equity, all of the person's equity in the house. You go any lower, he's underwater and he has to give it back to the bank. He's completely wiped out. He's very sad. It's a very sad thing when you lose all your money. Look at a lot of people have equity in their homes right now, but this equity is going to go away. And when this happens, it's kind of a snowballing effect. Okay, so let's say you got 500 homes in an area. Let's say 50 of them are for sale, 10%. That's not uncommon. Okay, so you got 500 homes total, 50 of them are for sale. Now, they've been going up. They've been chasing the market up. But when the market comes down, let's say one of those guys goes, oh, I really want out. I don't want to lose my $194,000 in equity. I'm going to lower my price right now by $30,000 so I can get out. Well, what happens to the other 49 homes? Well, all of a sudden, this becomes the comparable. They have to get under the market to get a bid on their house. And it starts to be a stair step down instead of the stair step up. It actually starts to come down. And it's a snowballing effect. And at that point, it's almost too late to sell. So I think that things are changing. I think the year 2021 is going to be very shocking for a lot of people on the real estate market. It's changing. The market's changing. It's changed from a seller's market to a buyer's market. Prices, they're going to start softening. Now, some laws have changed too. Now, in California, here's an important law. Okay, in California, when you inherit a property from a parent to the children. Okay, let's say your parents bought a house in California back 30 years ago. Property taxes on that house are probably $1,500 to $2,000. What happens when the children inherit it? Those $2,000 in property tax go up from $2,000 a year to $20,000 a year. The children say, oh my goodness, we don't want the house. Please sell the house. That's going to be another 100,000 homes just in California coming on each year because children, when they inherit a house, the property tax jumps up to the current market level. And it goes from $2,000 to $20,000. That's going to create more and more sales. Now, what Biden wants to do if he gets in, Biden wants to take away the 1031 exchange. Now, what does this do for landlords? When they sell, they got to pay the taxes. So when they sell, they can't buy into another house. The exchange goes away. So all of a sudden, real estate is not the great investment it's always been. prices will start to go down. It doesn't have the tax advantages anymore. Biden's going to take away the tax advantages to owning real estate. People say that's not a big deal, Mike. That's not a big deal. Prices are still going to go up. There's such demand. There's demand, but there's not affordability. They've run out of people that can qualify to buy a house. Look, interest rates are low, but people still can't qualify because houses are too expensive. They will come down. I don't know why we don't let them just come down to market level. Houses should not be up this high. The reason they're up this high is because the Fed keeps artificially lowering the interest rates. Do you know the Fed owns 1 out of every 3 mortgages? 1 out of 3, 33%, and they want to own them all. They're going to come and buy them all. They have to, because no one else in their right mind loans money at 2% for 30 years. A bank won't do it. No, they don't want to hold. They sell them. They make the loan and then they sell the loan to the Fed. The Fed's the one that owns these loans. They own your mortgages. Now, let's say we take the Fed out of the equation and we normalize interest rate. Let's say they just go back to 4, 5, 6%, which is pretty standard, right? That's even on the low side. What's that going to do to home prices? Oh my goodness, they're going to be chopped in half like that. Just like that. Now, I'm not saying this happens overnight. It doesn't. It's going to take time to play out. It's going to take years. But this year, we're going to start in 2021. Mark my words. Come back here to my channel. Hit that subscribe button. We'll talk about and see if I'm right. A year from now, home prices will be 20% lower than they are right now. But that won't be the bottom. Wait another year and they'll be 40% below. Now, then we're getting a little close to the bottom, but I think we'll hit that 50% mark. I do. I think we will. Maybe I'm wrong. I've been wrong a lot. I'm a real estate broker. I want to be wrong. I make money selling houses. I hope I'm wrong, but I don't think I'm going to be wrong. Let's see. Let's see what happens. Anyways, get out there, do some trading today. We got a full day ahead of us. It's still early here. The markets, once again, floating upward. Dow's up almost 200 points. Almost 200 points. Let's see what happens the rest of the day. I'm Tall Mike. Have a great day.